Welcome to Money Matters TV. My name is Paul Mitchell. I'm the Chief Credit Officer for Upland Business Capital, and I'm your host for this show. I'm joined by my co-host, Mike Dever, co-founder of Brandywine Asset Management.
Hello,
Mike,
thank you.
welcome to the show.
Thanks, Paul.
So, lots happening in the world economy and the money markets these days. We had a little conversation the other day about what we might talk about today that our viewers might be interested in, and certainly some of them are the impact of why is the stock market just booming, for example, as opposed to we're supposed to be in a pandemic, which is supposed to be killing people. People are supposed to be unemployed and stuff. And then I read that lots of people are unemployed and lots of people aren't looking for jobs. What's going on, Mike?
Well, it has really been a split economy over the last year, and coming out of the pandemic lows, you had a lot of people that were in these the 1 or 2 person type companies and hospitality that just got destroyed. Now some of that was offset with PPP money, and they were able to keep some cash flowing. But then on the other side, you had some really huge winners in the businesses that were helping people stay at home, work from home, and do things without having to go out in public. So that combined with all
in particular, I mean, it's a technology company. I guess more of a technology company than it is a products company. I don't know.
Well, yeah, I mean, the tech businesses, because now everybody needed to rely on the technology even more to be able to operate day to day. They're all booming. And then you couple that with the fact that we've had probably now, you add it up, about $5 trillion in stimulus that's coming in as direct payments to people. It's actually probably more than that now. Fed buying of securities, and it's just been the largest influx of liquidity, financial liquidity, into the markets in the history of the world.
And what that represents, 25% of our gross
GDP
national product?
It does. It does.
And
it's huge.
It's debt. How do we pay back that debt, or does it matter? Do we care anymore? What that all mean?
I think you just keep passing it down to the kids. I'm not going to worry about it. No, that unfortunately is the attitude. It's nobody's talking about that now. When I was kind of coming of age in the business world in the 1980s, people were getting on Reagan for running up the debt. Well, sure. He's a piker compared to what we have going on here today.
Yeah. We know parts of the dichotomy of what's been going on during the pandemic. I'd like to two little quick stories, and they're small business oriented. One was a construction worker near Burlington, New Jersey, got laid off very early in the pandemic. And what was he going to do? Well, he had been making hot wings since he was 9 years old as a hobby. Sometimes neighbors would say, I'm going to have a party, make some hot wings. So he thought about it. He opened a brand new hospitality business in the heart of the pandemic. And he's done very well because his wings are fairly terrific. Storefront, mostly, pickup. Well, it has to be pickup. People couldn't go inside. But it's an amazing story.
It's a great take-home business. The pizza has done well. I've got a cousin that's runs a few Jersey Mikes down in Austin, Texas. They've been doing really well. So the businesses where people can run in, order online, run in, pick it up, and take it home, they've done really well in this.
Yeah. The other story I have is the opposite. It's a high-end restaurant, a very small restaurant in a row house in South Philadelphia, 36 seats, that type of thing. We used to go there when it was about $50 a meal per person. He's a French cook, great credentials and stuff, and got a fantastic reputation. He ended up being charged $125 for a prefix BYOB, dinners, bring your own bottle of wine type of thing. And when the pandemic hit, he couldn't serve dinner inside. So I hate to use the word, but he pivoted, which was the right thing to do, and became more of a sort of a boutique. That is, he started carrying all kinds of French food products and that type of thing, selling them as grocery items, if you will, and sold takeout food, including fancy things like duck confit for $11 a leg, or escargot, call up, pick up in a couple of days type of thing. So he's in business, and he has his wife helps him, and he's got two young kids. But he's surviving.
I think it shows just the true entrepreneurs, the people that can pivot like that. They'll always find a way to land on their feet. And it's some people got lucky into business. They don't know what to do on their next move, but the true entrepreneurs, they can adapt, they can modify, they can continue to change their business
Mhm.
to flow with it.
I agree with that. What I've learned in financing entrepreneurs over the last 30, 40 years is that no matter what their business plan is today, that the most successful ones are able to change it and say, okay, well, it worked for a while, but things are changing, or opportunities are changing, or
That's right.
whatever's are changing. So I'm going to go in a little bit different direction right now.
Yeah, absolutely. Especially in the technology world.
Mhm. Well, even in the retail world,
Yeah.
I financed a company that said, we will never advertise. We will never have locations other than college towns, et cetera, et cetera. And lo and behold, 15 years later, it's a multi-billion-dollar company doing all those things.
Right. Right. Yeah. Yeah. Good for them. So,
So, what
the
else are you seeing out there, hearing from your clients?
yeah, it's so we're getting, obviously, but if you just watch the news at all now, you hear about cyber currencies, you hear about Bitcoin, Ethereum. That's led into these non-fungible tokens. People talking about Tesla and the different stocks that are exploding. GameStop,
Mm,
saga that we had, and that's all really just a symptom of the liquidity that's in the marketplace. When you've got this much money sloshing around and pouring into the market, which the governments, not just the U.S. but globally, have done to ward off depression, which was a likely turnaround outcome from
mm,
COVID. It's going to find its way into different markets, and what it's found its way into are these speculative financial markets, uh, to where now you're paying $60 million for a digital artwork.
mm.
Maybe you're not, Paul, but some people are.
Like, if someone give me a loan, I'll buy
Yeah,
it.
right, right. Well,
So,
can't you loan yourself?
if I issue some cryptocurrency, I guess I could.
Right.
But what would you recommend to our viewers in these heady worlds and stuff, and the liquidity and the fantastic valuations and liquidity issues and that type of thing? Nobody wants to be lost. Second fiddle type of thing.
People don't want to miss out when the
Yeah.
market's running like it is. I understand that. That's warranted. But at the same time, you really need to understand what you're buying and when you're buying in a high valuation environment, or an environment that's based more on momentum than on valuation. And we're in that environment today. Our markets are moving, stocks are moving because
Yeah.
they moved, and
Yeah.
that attracted more interest. And so now they're
Mhm.
moving more.
Yeah.
So, I mean, you're going to need to be careful. And I talk in my own book a little bit. I mean, what we do is protect investors
Yeah.
with downside protection on their
Yeah.
portfolios.
I think the best
Right.
recommendation is to seek some professional advice and stuff. Don't make
Yeah,
decisions on your own, et cetera, et cetera. Well, Mike,
absolutely.
we have a question from one of our viewers, as we're referring to, and it's right up your alley here. Ron Carson of Philadelphia asks, do you think stock valuations are too high at this time?
Okay, I'm going to preface that with, I wrote an article last March at the COVID bottom saying how there was a long way to go down. How this was not going to be a V bottom market, and it turned into being the greatest V bottom market in the history of the stock market. So, sure, I can answer the question. The answer really gets down to, what are people paying, and the valuations only look high in hindsight. And as much as you could say, there's definitely pockets of high valuations, and as I mentioned already, with Tesla or with an Amazon, and these are great companies, but the stock isn't necessarily a great stock at the price you're paying. So there's definitely pockets where there's overvaluations, but at the same time, there's a lot of value opportunities that are still existing out there.
You got to do an awful lot of homework to know
You
the
do
difference.
need to do homework, and it's a split market that way.
Absolutely. Well, thanks, Mike. That's some good answers there.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Now we'd like to move on to our featured guest, who this show is Denise Neason, CPA, tax manager with B, that's BEE, Bergvaqll and Company PC. Welcome to the show, Denise. Glad to have you here.
Thank you very much, Paul. It's great to be here.
So you're a CPA and dealing in heavy finance with all the stuff that's going on. So the first question we have for you is, how'd you get into this business?
I always enjoyed bookkeeping, and I did bookkeeping, to put myself through college. And then I always wanted to know more. So then I started to become heavy into accounting work, and I decided to take my CPA exam, and I passed that, and I became a CPA. I started working for Bergvaqll and Company, and gravitated more towards tax, and so that's what I've been doing since 2002.
Wow. Well, I know one of the big tax issues these days is how does the American Rescue Plan Act, what's now called ARPA, affect individual taxpayers like me and Mike?
Well, the much of the ARPA extends and expands the provisions from earlier COVID relief legislation. It's done through stimulus payments. I think most people are familiar with that. But there's also the expanded child tax credit, the health and care premium assistance credit, above the line charitable deduction. That's the $300 if you don't itemize. Extended unemployment benefits, and extended filing deadlines for contributions to IRAs, HSAs, and
What's an
accounts
HSA?
like that.
What's an HSA? I'm sorry.
A health savings account,
Okay.
if you have the high deductible premium.
Oh, yeah, sure.
So Denise, is that something anybody can participate in, an HSA?
You have to have a health plan with a high deductible in order to qualify for the HSA.
Okay, so if you're working for a company or your spouse and they have a plan, the company has a plan that you're on, you would have to go to them and find out if they had an option to go with a high deductible plan as part of that?
I believe so, yes.
Okay.
Right. Some companies actually will contribute towards an HSA.
Oh, great.
What's high mean? What's high deductible? Is that $1,000 or 10,000 or?
I think it's over $1,000.
Okay.
Exactly, I'm not sure.
Okay. So we also heard that the individual tax filing deadline has been extended to May 17th, about a month from normal.
Right.
But why should I still file as soon as possible?
There's a number of reasons. The main one is if you're due a refund, as soon as you file, the sooner you'll get your refund. Another concern that we have is identity theft through the tax preparation. Somebody could file a return before you file your return. If that should happen, you have to file documentation with the IRS, such as an affidavit. It's a pretty extensive procedure that you have to go through.
Wow.
You may even have to have a telephone conversation with the IRS, basically to prove who you are, even though you're filing your own return. And then you're going to have to file a paper return. All of this would delay any sort of refund that you could anticipate. Another reason to file sooner and get your refund is because you can pay off some high interest debt that you have. If you wanted to look online to see where your refund is, you go to irs.gov, where's my refund, and you can track your refund. You can also file soon if this would give you time to figure out what your liability is rather than have a big surprise if you wait. And then therefore you can plan to save money to pay the tax liability off, or you can file an installment agreement application. So you can do that actually online. Also, please consider filing electronically. That does save time and also speeds up your refund. Filing via paper will lead to delays, especially now. The IRS is still experiencing significant backlogs due to their closure.
So is the reason for the delay and extension, I guess, to May 17th, is that more because the IRS isn't capable of handling it, or is it because they think the filers aren't capable of handling that?
This is my own personal take on this, is that the IRS has a lot to contend with at this time. They had the stimulus payments that were issued in January. Then they had to update their software to accommodate that. Then in March, they passed the tax law, and some of that was actually going back to 2020. So they had to update the regulations, they had to update their software, and then all of the software companies had to update their software and get permission as well. And the other factor that needs to be considered is that we now have a third stimulus payment. All of this is being orchestrated by the IRS. And like I mentioned earlier, the IRS already has a pretty significant backlog.
And speaking of the stimulus payments, is that something that people have to pay tax on?
No, they do not. The stimulus payment is actually considered to be a rebate, if you will. It is not taxable income. The reason why your accountant might be calling you up and asking you what you received in the first and second stimulus payment is because the IRS is using that as a way to true up. For example, if you had a higher income in 2019 versus 2020, they'll look at 19 or 20, whichever one has the lower adjusted gross income, and they'll base the credit upon that. So say if they based it originally on your 2019 tax return and you had higher income, you have lower income in 2020, you could receive more of the stimulus payment.
Okay.
Were all state and local filing deadlines also extended?
From the majority of states, we're hearing they're coming online and they are extending or postponing the date to be May 15th. But you have to check. But as far as we know, not as far as we know, but Pennsylvania and New Jersey, we can confirm that they have been postponed to May 17th. Berkheimer and Keystone, the big collection agencies around here, while they're not saying that they are extending the tax filing deadline or postponing it, what they're doing it is they've decided to waive the interest and penalty that could be charged from April 15th until May 17th. So basically, it's a way to not penalize you for filing and up until May 17th. But the due date, I believe, at this particular point is still April 15th. They're waiting to hear from either DCED or the governor to see if they're going to change that. With the BPTs, they are run by localities. So majority of them is what we know right now. They have not changed their filing deadline, so you should contact your localities for that. Philadelphia just came out yesterday and said that for the business income tax receipts and net profits, the earnings tax and school income tax for 2020, as long as you pay the tax due no later than May 17th, they will waive or abate the penalty and interest.
So I'm interested in people's background. Now, you started as a bookkeeper, you moved into accounting.
Mhm.
What did you do through school prior to that? Were you always interested in
Yep.
math in school? So you're taking math type classes and on that
Yes.
type of path. Okay.
Right. Yeah.
So this was because I was similar. I just always liked math and science. I like business too, and it led me into the investing world because it combined all three of those things.
Mhm. Yep.
So yeah, it's nice you find something that fits your personality.
Right. You're helping people throughout the year, but we do the historical at the end, if you will.
Right.
I avoided math in college, anything to do with numbers, because I almost flunked math in 11th grade. And then after I graduated from college with my history degree and got married and went to a few employment agencies and got a couple of jobs in sales, I ended up with a job in banking.
Yeah.
And I love banking, helping people with their finances and all.
Mhm.
I said to myself, well, if you're going to do this for a career, maybe you should get a little more background. So I started going to night school for a whole bunch of years and almost got my MBA at night. But I got all the finance courses. I said, I can't believe I'm taking calculus and stuff. But I did that to enhance my career in banking, which basically banking, non-banking for 30, 40 years, which I enjoyed very much. You're helping businesses like you guys do the same thing in a different way.
Now, when you went through the second time, did you get better grades? Probably improved.
Yes, except for the one time when I decided to try to take 2 courses at night.
Oh.
And the second one was calculus. And after I flunked the first exam, I went to the professor and said, well, look, what can I do to make up this? I mean, those days, a lot of colleges and professors were very, lenient about that. He said, nothing, you're going to flunk.
Is that right?
Oh,
So I
no.
dropped the course.
You'd think it would have been better the second time around, but okay.
Well, I got B's pretty much everything I took at that time.
Right.
Mm.
I
Okay.
mean, starting classes at 6:30 in the evening to like
Yeah.
9:30.
You're just trying to stay awake through the class.
Yeah.
Yeah. So, Denise, you mentioned earlier about the identity theft with tax returns. Is that people filing to get a refund? Is that are they just totally filing a fake return, or how do they get away with that?
So this is what I've when I've seen programs, I'm very interested in this because it's in it's in tax related. So basically, what happens is somebody is comes in contact with information such as the person's name, date of birth, and social security number, and then they sell that. They sell that to people that there's a market out there for people that will buy this. On the program that I watched once is the gentleman. He got up in the morning, he went downstairs and he took the information and he went on to a tax program and he prepared fraudulent tax returns. So to answer your question, yes, they'll put in fake W-2 information that has a significant amount of federal tax withheld, and then they put a bank number in, and then because the IRS, you do things and it's set up so that it feeds directly into the computer. They could issue a refund to that particular bank. They started to put a lot of checks and balances in with that to try to mitigate that. I haven't heard as much of that happening within the past 3 years. So I think that, and from what we've heard from the the advocates, that they are definitely working on that. The other thing is there's more, people going, committing the fraud where they go in, they take your information through phishing and all of that. So they can get that information that way as well. And the same thing, they just file tax returns.
Mm-hmm.
It's like a
Wow.
job.
Yeah. Wow. That's crazy. Yeah, and
Nice.
it's easy to
Yeah.
find this data on. I mean, all these data breaches we've had with Facebook and all these different companies over the years. That probably everybody's information's out there somewhere.
Yep.
Well, at the same time, I recently wanted to get a new paper Social Security card because that's what you need for the real ID type stuff.
Mhm.
It can't be a laminated card or something like that, or just a number. And it took me maybe half an hour to fill out all the stuff on the internet
Wow.
with the Social Security or whatever it is to be able to get it. All these little numbers, they would send to you to verify that you're there and all this type of stuff. So they're doing their part. I have to say that. I mean, most people, I think, would just drop and say, I'm just not going to do it.
Mhm.
But Denise, what about here's another question for you. What if I filed a paper return for 2019, paid taxes due, but I'm getting notices?
Because of the backlog that I mentioned earlier, we have seen that. Another thing we've seen is that some of my clients have received letters from the IRS, and I've actually checked to make sure it was actually the IRS, and it says, we received correspondence from you and we need additional time to address it. It's known as the 60-day letter. So the IRS is supposed to issue communication to a taxpayer after they receive communication from them. I contacted my clients and they said, we have never sent anything into the IRS. So basically what the IRS is saying is they're going to catch up. They say, do not file another tax return. And basically you should just wait.
Wow.
That's really difficult to do, but
For the IRS, usually they're not very patient.
right. On the other end, yes.
Now, Denise, do you make any forecasts or prognostication? You're saying, hey, I think taxes are going to go up or taxes are going to go down, or when you're doing tax planning for a client, how can you take that into consideration, or do you have a crystal ball, I guess?
Right. So one financial planner that I worked with said that you really can only plan for what you know now. So that's what we do when we're preparing a tax return. We have tax projections that we do for our clients. But the other thing is we always keep in the back of our mind what could eventually happen. So I would definitely urge people to listen to the news, especially when they talk about potential tax changes that are coming up. The one that may happen is that it's been mentioned that the top individual income tax rate for taxpayers that have over $400,000 will increase from the 37% rate to the 39.6 rate. That's pre-TCJA rate. They're also saying that long-term capital gains and dividends, qualified dividends, would be taxed at the ordinary rate of 39.6% for those that have over $1 million of income. So that is something to be cognizant of. Also, the real estate and gift taxes, they're set to go back to the pre-2009 rate, where the estate was 3.5 million, and they're going to put the gift tax at $1 million. So people have done a lot of planning, estate planning, with the higher rate that we have right now. It's over $1 million. So we have all that estate planning that has happened, wills, trusts. So all of that might need to be revisited if they do have these tax changes in effect. The other thing we've heard is that the corporate tax rate will more likely rise from 21% to 28%, but that's still lower than pre-TCJA, which was 35%.
When you were saying 39% for the top bracket, what were those letters you used?
Tax Cuts and Jobs Act that was put into place in 2018. It was a really large tax act.
Right. Okay. So it takes it back to where it was prior to that, you're saying?
Correct.
Is
Correct.
that right?
Mm-hmm.
Yeah.
So jumping from 37 to 39.6%, which is pretty substantial. But then within that, some of the brackets might close as well. So more people might fill that particular bracket.
Okay.
Denise, just one last question for you. If somebody wanted to get in your business, and it's certainly a business that's not going to go away, probably continue to grow, what kind of advice would you give a young person?
The way we look for people is that we have interns that come and work for us during tax season, but they work in both audit and tax. Usually when you get out of college, you're not quite sure if audit or tax is the way that you want to go. I would say they should definitely work in both areas before they make a decision. Both of them, some people are really, really fit for the tax side. Some people are really, really fit for the audit side. And, once you go to either side, you're pretty much there for the rest of your career. So it should be something that you really enjoy.
Mm-hmm. Thank you very much. That sounds like very good advice.
Thank you.
And certainly you've had a lot of expertise in the tax and accounting world, and we appreciate you being on the show.
Thank you.
So thank you very much, and we'll hope to see you again soon. And now I just want to announce who our next guest will be on the Money Matters show. That'll be John Farley, Managing Director of Gallagher & Company. So that ends our show. So we thank you for viewing, and just want to remind you that on this show, your money matters.